else is that they're volatile. GameStop is a famously volatile stock, and of course, crypto itself tends to be volatile over time. The beauty of covered call strategies is that they translate that volatility into income. We've seen success already at Bitwise doing covered call strategies on stocks like Strategy, like Coinbase and others. And we thought, why not apply that to GameStop as well? It's a way for people who are excited about being long GameStop to maintain that long bias, but also generate really substantial income by translating that volatility into dollars in their pocket.
Now, in a news release, Bitwise points out that as of March 31st of this year, 79 public companies hold a collective $57 billion in Bitcoin on their balance sheets. That's a nearly 160% rise over the past year. What do you attribute that bump to? And generally speaking, why do you think public companies are betting big on Bitcoin?
Yeah, I think there are a few reasons for that. We think this is a mega trend, by the way, that's going to accelerate into the future. One, of course, is increased worries about the dollar. Corporations globally are sitting on records amount of cash, and what they've historically done is park it in short-term US treasuries. It's a massive deal. Look, for crypto to really reshape how the world's global finance works, which is the market we're going after. That's how crypto goes from $3 trillion to a $30 trillion market. We have to be at the center of how global finance works. We need to rest on a strong foundation. Right now, crypto regulation in the US, which is the world's economic center for better or worse, rests on executive orders and legal interpretations. There's no laws that protect it for the long term. If we look back at the history of technology, we've seen major laws set the standard that allowed for, technologies like the internet to grow and dominate the market. We need the same thing in crypto. And the fact that we made it through the Senate, at least onto the floor, we passed the most difficult hurdle, tells me that we're going to get there. If we do get there, I think we're looking at the longest and most sustained bull market that crypto has seen. I think it takes us up a major leg in terms of what crypto can do. Prevail. I think we'll get this through the Senate. I think we'll get it through the House. I think it will be signed by the president. And again, I think that will set the stage for a major bull market in crypto that could extend for multiple years.
Expanding on that as well, in that blog post I referenced earlier, you argued that progress on the stablecoin bill could pave the way for a multi-year bull market in crypto, as you just mentioned. Last month, we saw Bitcoin hit a new record under $112,000. I heard you say in an interview in April that you expect Bitcoin to reach more than $200,000 by the end of this year. Are you still optimistic that could happen? And what are some of the other factors that would help catapult Bitcoin to that level?
Yeah, we still are holding by that prediction. I think that's how the market is setting up. You know, when we look at the market, Talia, we see a structural imbalance between the demand for Bitcoin and the available supply. We know the Bitcoin network only produces 165,000 Bitcoin per year. That's the full supply. And we see demand from ETFs, which are pulling in hundreds of thousands of Bitcoin per year. Corporations, as we discussed, also purchasing hundreds of thousands of Bitcoin, and governments purchasing, in our view, hundreds of thousands around the world are enough to lift this market much higher. It is just a fantastic setup for Bitcoin right now, with worries about the dollar, growing institutional demand. I think it's going to be a fantastic second half of the year.
And it certainly will be very interesting to see if your forecast comes to fruition. But in a blog post last week, you outlined a, quote, different approach to thinking about Bitcoin's role in a portfolio, arguing that even though Bitcoin is a highly volatile asset, as you mentioned today, it doesn't mean that adding the cryptocurrency to a portfolio makes it significantly more volatile. You compared 4 portfolios with different allocations, one without Bitcoin at all, and the others with either a 5% or 10% allocation. What was your big takeaway from comparing those different portfolios?
Yeah, I think they're really two. You know, the first is just because Bitcoin is volatile, when you add it to a portfolio mix, it doesn't increase the volatility of the portfolio overall because it's not correlated with stocks and bonds, right? That's the famous free lunch of investing. When you security, right? We've dramatically reduced costs. We've dramatically improved security. They've been a net win for investors. What that tells me is that we can go further down the spectrum to these other alternative assets that people want exposure to, that they're currently buying exposure through centralized exchanges, which may have high fees and security risk. why not allow them to access it in a safe, secure, low-cost ETP format? There's no guarantee that we will get there, but if we're reading the tea leaves, we're very optimistic on many of these alternative assets. Not every crypto asset needs an ETP or should get an ETP, but we think investors want and should get exposure to more assets than just Bitcoin and ETH. And I do think we're going to get there towards the end of the year. The SEC is very constructive. They're open to discussion.
That we never have to pay back, that we pay a dividend on, but we could suspend the dividend if we needed to. So Jim has been thinking that we somehow needed to sell the equity. We now are in a situation where we have Strike, Stride, and Strife, three publicly floating preferred stocks that are not dilutive to the equity. They all meet a different market requirement.
Right.
That $110 million of Bitcoin we bought last week, that was acquired without issuing any common stock. So what's going on here is that we're using our $60 billion of Bitcoin collateral to issue credit instruments. They never come due. There's no liquidation risk. There's not even an interest rate risk, right? It's a non-cumulative preferred, and we could suspend the dividends.
Right.
So at the end of the day, if he's lucky enough to short the stock below 1 times NAV, we're going to issue the preferreds, buy back the stock, and make money for our shareholders. If the stock trades at a weak premium, we're just going to sell the preferreds. And if the stock rallies up, he's going to get liquidated and wiped out.
Well, let's talk about that premium, because
over and above the actual holdings of the Bitcoin the company has.
So, as you said, you have about 60 billion, 63, 64 billion dollars worth of Bitcoin. Your company is worth about twice that at 106, 107 billion dollars in market cap. And you also have obviously an enterprise analytics software business. How do you break down the value of the rest of your company ex Bitcoin holdings?
If the company generates $10 billion of Bitcoin gains this year, you got to put a 10 or a 20 multiple on it, right? So the Bitcoin treasury company operation is worth a multiple of 10, 20, 30, or 40 times the BTC yield we're generating. That's the number one source of value for the operating business. And then the company also has $60 billion plus worth of Bitcoin. And I would say to investors, look at it that way. A BTC dollar gain is like our earnings equivalent. And then the Bitcoin NAV is the assets on the balance sheet. And you should just look at the earnings equivalent and put the multiple that you think is appropriate on it to come to an opinion about the value of the entire enterprise. $1,000 a coin. But at the current price levels, it only takes $50 million to turn the entire drive shaft of the crypto economy one turn. And you've got the Trump media organization announcing $2.5 billion. You've got GameStop announcing $500 million. You've got my company that's raising billions and billions of dollars. So the writing is on the wall. Bitcoin's moving higher.
Okay, so there's a few things to dig into there. One, that in your words, Bitcoin winter is not coming back. I'm rereading Game of Thrones right now, so that statement gives me the shivers. But I did want to go to the competitive landscape, if you can phrase it that way. And you went there naturally. You think about the ETF suites out there. IBIT, for example, already up to $72 billion in assets. There's a lot of Bitcoin treasury companies that have come to the scene. As you mentioned, 21 Capital comes to mind, started by Jack Mallers. And they all have the intention of just accumulating Bitcoin. That would be good for the price, Michael, as you say. But do you worry about the competition out there to buy Bitcoin? It's going to become more and more expensive, and everyone's competing for a shrinking pie, if you will.
I think we're in a digital gold rush, and you've got 10 years to acquire all your Bitcoin before there's no Bitcoin left for you. The competition is a virtuous competition. Metaplanet's
called it probably rat poison squared. When does it win those people over?
People called electricity worthless and aircraft worthless too when they didn't understand them. So I welcome the competition from JP Morgan. I hope they enter the space. Our advantage is that we're 100% Bitcoin. So whenever we create a preferred stock, it has the Bitcoin performance, and it has a measure of Bitcoin performance and a fraction of Bitcoin volatility. That allows us to issue the most liquid preferred stocks in the world at the highest performance. Strike was up 29% when the rest of the market of preferreds was down 6%. Strife was up 22% when the rest of the market was down 4.6%. It's impossible to issue Bitcoin-backed convertible preferreds and Bitcoin-backed fixed preferreds unless you're willing to make 100% of your balance sheet Bitcoin. So I'm not really worried about competition from JP Morgan or Berkshire Hathaway. I would love for them to enter the Bitcoin space, buy up a bunch of Bitcoin. When they do it, they'll be paying $1 million of Bitcoin. The price will go to the moon. That will be good. Yields at par. 10 to 100x higher liquidity. They trade really, really hard, very, very liquid.
Right.
And they're homogeneous credit, and they're 6x over collateralized. So it's a very compelling instrument if you believe in Bitcoin as a digital asset.
So just to finish the thought here, and I'm looking at Invesco's preferred ETF, the ticker there is PGX. That charges an expense ratio of 51 basis points. It has about $4 billion in assets. When you say that you're in competition with funds such as this one, are you referring to the fact that you're competing for investor attention with these ETFs? I just want to make sure I'm understanding your point.
Yeah, what I'm saying is you go buy that and maybe you get 7% yield effectively, and you pay the 50 basis points. And some of that is QDI eligible and some of that is taxable. When you buy one of our preferreds, like Stride is yielding like 11% plus right now, and Strife is yielding 9.5%. You buy that, it's all QDI eligible. It's trading 10 to 50 times more liquid on a dollar for dollar basis. It's very home.
Like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.